Last week, equity indices crossed new all-time highs, but oil prices also continued their march upward as financial markets continue to look beyond or even past geopolitical uncertainty and instead focus on robust corporate earnings growth, particularly in mega-cap tech. New GDP data showed that the economy held up in Q1, with the AI CapEx build-out, now one of the most expensive projects in modern history, supporting growth through the private investment channel. The Fed held rates on hold as widely expected as Chair Powell delivered his last press conference before incoming Chair Kevin Warsh assumes the helm next month. This week, the labor market will be in focus. Jobs data have been messy. The unemployment rate is still quite low and jobless claims are extremely low, but the average pace of new job growth has slowed, basically to a halt. Tuesday's job openings and labor turnover survey, or JOLTS, will show if the months-long pattern of low hire, low fire continued through March. The job openings rate will tell us if firms are dialing back up their hiring plans, and the layoffs rate will show whether companies are starting to slow their workforce growth through separations, rather than just holding off on backfilling positions. On Friday, we'll see the official jobs and unemployment data for April. The economy has added few, if any, net new jobs in the last year, and outside the healthcare sector, job growth has actually been outright negative. But as we highlighted in our monthly market update last week, this slower rate of job growth doesn't signal a recession the way that it might have just a few years ago. And that's because the constellation of weaker demographic trends, slower population growth, and a reversal in migration trends means the economy just doesn't have to mint as many new jobs to break even anymore. Compositional trends do matter, of course, and markets will be paying close attention to whether sectors like finance and tech and business services continue to shed jobs. Fed officials will be back on the speaker circuit this week, following last week's contentious rate-setting meeting. 4 of the 12 voting members dissented from the committee's decision and guidance, the most since the early 1990s. The Fed is viewed as solidly on hold for the time being, but markets will be paying close attention to find out if the Fed is returning to a framework of seeing rate hikes as equally on the table as cuts, especially after some of the hawkish commentary from the European Central Bank last week. So things to watch this week: job openings and layoff data on Tuesday, the unemployment rate and payrolls report on Friday, and Fed commentary throughout the week.
The views expressed are solely those of the authors and do not necessarily reflect the views of First Citizens Bank and Trust Company or any of its affiliates. This material is for informational purposes only and is not intended to be an offer, recommendation, or solicitation to purchase or sell a specific investment strategy, any security, or insurance product, and should not be construed as legal, tax, or accounting advice. Please consult with your legal or tax advisor regarding the particular facts and circumstances of your situation prior to making any financial decision. While we believe that the information presented is from reliable sources, we do not represent, warrant, or guarantee that it is accurate or complete. Many companies referenced in this content are independent third parties and are not affiliated with First Citizens Bank and Trust Company. All third-party trademarks referenced, including logos, trade names, service marks, and icons, remain the property of their respective owners. Your investments in securities and insurance products and services are not insured by the FDIC or any other federal government agency and may lose value. They are not deposits or other obligations of or guaranteed by any bank or bank affiliate and are subject to investment risks, including possible loss of the principal amounts invested. Past performance is no guarantee of future results. Estimates of future performance are based on assumptions that may not be realized. This material is not a solicitation of any offer to buy or sell any security or other financial instrument or to participate in any trading strategy. Diversification does not guarantee a profit or protect against loss in a declining financial market. First Citizens Wealth is a marketing brand of First Citizens Bankshares Incorporated, a bank holding company. The following affiliates of First Citizens Bankshares Incorporated are the entities through which First Citizens Wealth products are offered. Brokerage products and services are offered through First Citizens Investor Services Incorporated, FCIS, a registered broker-dealer, member FINRA, and SIPC. Advisory services are offered through First Citizens Investor Services Incorporated, First Citizens Asset Management Incorporated, and SVB Wealth LLC, all SEC registered investment advisors. Certain brokerage and advisory products and services may not be available from all investment professionals in all jurisdictions or to all investors. Insurance products and insurance are offered through First Citizens Investor Services Incorporated, a licensed insurance agency. Banking, lending, trust products and services, and certain insurance products and services are offered by First Citizens Bank and Trust Company, member FDIC, and an equal housing lender and First Citizens Delaware Trust Company. For more information about First Citizens Bankshares Incorporated, its subsidiaries, and its investment professionals, visit www.firstcitizens.com/wealth/disclosures.